Hello, good afternoon. Um, Nice to have us here. Can we just wait for like 3 more minutes or 4 more minutes so that once we wait for that time and we're ready, we'll just kick off. And by the way, this class will be recorded, so in case you need the information later. Thank you.
Thank you.
Okay. Good afternoon. Good afternoon, all. Can we all hear me, please? Hello, can we hear me?
Yes, I can.
Okay.
Yes, we can.
Yes, we can hear you, sir.
Yeah. Great. Welcome to today's masterclass. We'll be. I want to welcome us to today's class. What we want to do today is more of a demonstration, and it will be a hands-on project where we would actually build things from scratch, right? We just want to show what is possible with Excel as regards financial modeling. Okay, let me quickly share my screen. Okay, can we all see my screen, please?
Yes.
Hello, can we see my screen, please?
Yes, we can
Okay,
see
great.
it.
We can
Yes.
see it.
So basically, this class is brought to us from Zen Consults, a consulting firm that deals with training in finance and Excel, and also data analysis, right? So this is one of our free master classes where we'll be doing a live demo of what is possible if you work with Excel, actually in a finance capacity. So we'll try to keep it as brief as possible because we have quite a lot of things to do, a lot of things to explain. I would suggest, if we are learning, that we have our pen or notepad down so that we can jot down one or two things. I would be going through how to create all these things, as well as a lot of shortcuts, hacks, tips, and all. Because it is not a class, it's more of a demonstration. That's why we didn't share the workbooks with us. But I'd like us to follow along and feel free to ask questions, right? If I do something that is not clear, feel free to ask questions and just try to follow along with what we're doing. If anything is anything is not clear, feel free to ask. And so that's that. Let's jump into the task at hand. Very simple. What we want to do is to produce a 5-year, 3-statement forecast model, right? So we have a company that gives us this data. They have their income statement data from 2019 to 2021, right? They have their revenue, COGS, and the rest. We have their balance sheet for, oh, sorry, this should be 2019. Let me just make that change. This should be 2020. And this should be 2021. Okay, so we have the balance sheet for the actuals for 3 years, and we have the income statement for 3 years. So our task is to basically build a forecast model that would forecast from 2022 to 2026, if I'm correct, right? That's basically the task. And so we're going to do that with this source information. We're going to build actuals and build forecast, and we would also try to see how we can make the model as flexible as possible. Okay. Basically, we have this information that they gave us outstanding information of the company, that the outstanding debt is due to be paid in 10 years. Interest rate is 9%, tax rate is this, and the dividend payout ratio is this. Okay. Yeah, in case I forgot to add, this class is being recorded. So at the end of the lecture, those of us that want to have access to the video, okay, so those of us that want to have access to the video can request for it, and will give us access to this video recording. Okay. Yeah, so basically what we want to do is we want to map the income statement. We want to create actuals for 3 years, income statement, balance sheet, and cash flows, right? And then we want to create a 5-year forecast for this company to know whether the company will need to add more cash, or the company is profitable, or whether it makes sense or not. And also at the end of when we're done with the task, when we've finished our entire model, we would look at some best practices and also some interesting ratios that as a financial analyst you should know, or you should be able to calculate. So again, like I said, please, if there's any question you have or anything is not clear, feel free to ask so that we can have a fruitful time. Okay, so these are the 7 steps that we're going to do basically. First thing is we're going to map the income statement. This is more like a trial balance of sorts, but just for income statement items. I can see different types of revenue, different type of COGS, different types of operating expenses and interest expenses and the rest. Okay, and then we're going to, after mapping the income statement, we'll create a P&L, which is our income statement itself. Then we'll create a balance sheet and forecast. Then we'll create a fixed asset schedule. We'll create a financial liability schedule. We'll create an equity schedule. Then we'll create a cash flow, which will then tie everything together. Okay, so we need to start with the income statement data. We have to map the income statement data. Now, first things first, one of the golden rules of Excel, so to speak, is when you are working with data like this, right? It's best to always have a copy of the data you're working with. That is, you know, some people have data like this and then they'll just start typing stuff over the data, or they'll start, you know, adding different things to different parts of the data. It's always best, right, to have your data as the original, you know, the original way the data is, just leave it like that. Then to create a copy that you can now use for your analysis, so that if there's any question or any ambiguity, you can always go back to how the source data was, and you can always have access to it. All right. So, like I said, yeah, before I even continue, I need to mention this is not an introductory class. So I'm assuming that most of us here, we use Excel, or we have idea of what Excel is, and so we're going to hit the ground running. Basically, that's the idea. So we're not going to explain what the home tab or we're going to go directly into it. All right. So let's move. First things first, we need to create a copy of this our data before we map it, right? So I'm going to create a copy of this data. Now, there are two ways to create a copy of the data. I can either right click on the sheet and then, okay. So if I right click on the sheet, I can see move or copy. I click on move or copy, then I can move it to the end, create a copy. And once I press OK, I'll see a new copy of the data has been created. This is my original data, and this is the copy of the data for my sheet. Okay, and this is the copy of the data for my own workings. Now, I personally don't do this. I'm going to just right click and delete this. The fast way of copying a sheet is you move your cursor over the sheet, hold Control, select, and then move. You'll see that there is a downward arrow that is showing where once I release it, where is it going to go? I'm going to move it to the end and then release. Okay, and now I've created a copy. That's the fast way of doing that. So before I do that, let me quickly create a sheet. I'm going to create a new sheet, put it here. I'm going to call this source data. Okay, I'm going to remove the grid lines, go to view and remove grid lines. And then I'm just going to type in capital letter source data, so that I know that beyond this is where my source data is. I'm going to go to my home tab and increase the font. Okay, that's the biggest it can be, so that's fine. Make it bold, and that's fine. So this source data, let me just right click on the tab and give it this dark color. So now I'm going to duplicate this same sheet, hold Control, click on it, and drag and just put it here. And then I'm going to call this workings. Okay, I can spell workings. And like I said, from the scratch, we are building this model as if there's nothing on it. All we have is the source data. We're going to write every piece of formula and we're going to every formatting, everything. We're going to do it from the scratch. So I'm just going to call this workings. Okay. So this is my source data. This is income statement, balance sheet 2019, 2020, 2021. And these are workings here. So first workings, I'm going to call this, what should I call it? Anything, income statement workings. Let me call it income statement mapping. Okay. Now, I want to map my income statement. What does that mean? Of course, we know that our income statement, we have our revenue, we have cost of goods sold, we have that gives us gross profit. Then we have the OPEX, that gives us EBITDA and the rest like that. But here I have different kinds of revenue, different kinds of COGS, different kinds of interest expenses, and so on and so forth. So I need to be able to map it, right? So first things first, for one, I personally do not like to have these empty cells above here. So I'm going to select this tool, right click and delete, then select column A, right click and delete. So you see, now I've changed something in the data. My original data source that I have is still here. The exact way I have my data source, but I'm not touching this. I'm just going to work on this side here. Next is these are headers. So I'm going to make this entire column one bold, select Ctrl B. Then if I If I scroll down, I can see that I'm not seeing the top row anymore. I want to be able to see the top row, so I need to freeze panes. To freeze panes, I select cell A2 because I want to freeze from row 1 up. I select cell A2, go to View. On the View tab, this is freeze panes. I click on the drop down and I can click on it. So now I can see that this is freeze panes. My panes are frozen. If I scroll down, I can see that. So now I need to, select what is revenue, what is called, and so on and so forth. So to do that, I need to put in my filter. There are many ways of doing it. By the way, there are many ways of doing different things in Excel. So many ways. There's no one size fits all, right? But this is just the way I think is easiest to do it. I'm going to go to column D and type map here. And I'm going to put in my filter. To put in filter, I can go to data and then select filter here. I use the shortcut a lot. If I go there, you can see that the shortcut is Ctrl-Shift-L. So I'm on the data, I press Ctrl-Shift-L and I can see my filters. Select the 4 and then double click to expand. Let me Ctrl-Z to expand this. Oh, this is right aligned, so let me make it left aligned. Select this, go to home, left aligned, and then select this and expand. Okay, so now what I need to do is to filter. I can click on this, my drop down, and type revenue. Let me filter this. So these are all my revenue items. These are all the revenue items, right? Let me say I don't want that other revenue. Maybe I want it on a separate line. Let me just leave it like this. So this is revenue. Okay. So now I can map this. How do I map it? I just need to type revenue here and Control Enter, right? Again, please, if I am being too fast or I'm saying something that you don't understand, please feel free to ask questions. This is a demo, but you can also ask questions for clarity. Okay. Yeah. So now to copy this down, I can either double click and it copies revenue down, or I can come to the end. To fly to the end, I'm going to press Control down. I hold Control and I press down. That takes me to the end. I come to this next cell. I press Control Shift up, and that selects this. Now I can press Control D. Control D will copy what is up and bring it down. So Control D. That's another way of bringing down the revenue. So now I've fixed my revenue. Let me go back to the filter and type revenue again. This time I want other revenue. So this is other revenue. I have 3 values here. I can just copy this, paste this here, and Control D, select that. Okay. So I'm done with revenue. Now, one thing I do is this: when I'm creating maps like this, right? I would first of all clear the filter from everywhere. Now, on this map column, you can see that some have been filled and some are not filled yet. So I'm going to click on the drop down, and I'm going to select blanks. Once I click OK, now I can see that the only things I'll be seeing here are the values that have not been filled. Okay, that's just a fast way. If I'm creating a map of something, I'll just select blank here. So I only see the values that have not been filled. So I can come here and let's do cost of goods sold. I can select 1, 2, 3, 4. Okay, so I have these values here. I can come here and type cost of goods sold. I'm going to double click here, double click and send it down. Oh, Control Z. Let me use the other method, Control down. That's why it's good to know a lot of methods in Excel. Again, what I'm doing here is Control down to get to the end, right arrow, Control Shift up to select everything from the top, then Control D. That copies that down. And we're good with that. I'm going to come here again, and this time I want DNA. It filters all the DNA for me. So basically the same thing. I can just copy this, paste it here, select this. In fact, I can even do, now there's another thing you can do. I don't know if we know this. If I select a range like this, and I type anything in this range, if I press Control Enter, what I type in this range will be filled into the entire selection. Again, I select a range like this. I type dial, and I press Control Enter. The dial I've typed will be copied into the entire range. So I can use that understanding here. Watch this. The reason why I'm not just Control C and Control V is that when you Control C and Control V, Let me admit all. When you just Control C and Control V, there are some hidden values here. So you can go and overwrite those hidden values. So you might either want to use the Control D, or you just use this idea now. So I'm going to okay. All right. So when you Control C and Control V, you might copy into these values here. So what I'm going to do, I'm going to just select this D and A, Control C, come here and enter to paste. With it selected, I'm going to Control Shift up. That selects the top, Shift down, brings it down. I'm going to press F2 to go into edit mode, and I'm going to press Control Enter. That's another way to fill in the values there. All right. So I'm going to click on this. Now let's go to interest expenses. These are all the interest expenses. I'm just going to type interest expenses. Oh, I'm too lazy. Copy, paste, come down, Control Shift up, Control D. That does that. Next one is operating expenses. Let me copy the top here. Copy, paste, Control down. Right. Next, we have taxes. So copy, paste, down. And just like that, by the time I unfilter this and I unfilter this, I have created a map for each of these values, right? So with this map, I can, if I want to know what my total revenue is, I can use this column to calculate total revenue. If I want to know what my cost of goods sold is, cost of goods, this is not, I'm supposed to say cost of goods. So let me filter this. Beautiful. I can actually, make changes here. I'm going to select this first one. In fact, let me Control Shift down to select everything. Control backspace to go back to where my selection is. Then I go into the formula bar, change this to cost of goods, and Control Enter. Okay, so that does that. Let me clear the filter again. So now I'm done with the map. The next thing I need to do is to extract the month from this date. Right? I can see that for each date here, you have 12/1/2021, then you have 19, some 2020, some 2021, and so on and so forth. I can see that the last 4 characters of this date column will give me the year. Sorry. The last 4 characters. Once I pick the last 4 characters, I can get the year. So without understanding, I can type year here. Y-E-A-R, here. And now I want to pick the last 4 characters. By the way, if I click and drag here, I can see that this is not a date. If it was a date, it would be left aligned. Like if I say 1/1/2019, I can see that this is right aligned because this is a date. If I say equals this plus 10, that gives me 11/1/2019. But if I say equals this plus 10, gives me value error because this is not a date, right? So because it's not a date, we can't use the year function. Normally, I'll just say equals YAR, right? There's a year function. Click on this. It's not going to give me anything because this is not a date. So I need to use another function to get the last 4 characters, which is the right function. So I'm going to say equals RIGHT. If you look at the screen tip, it says returns the specified number of characters from the end of a text string. So tab, I'm going to, he asks for 2, it has 2 arguments. The first one is the text. I'm going to click on it. Again, this is not a date, this is text. So I want to treat it like text. Comma, number of characters, I want 4 characters. And I can close and Control Enter, and that gives me the year 2019. Double click and send it down. So I have 2019, 2020, 2021, just like that. And this will be useful for when I want to produce my income statement. Okay. So tax 1 is done. Map the income statement. I've done that. Next task is to create the P&L. So now I need to create a P&L from this income statement mapping. Okay. I have my values here that I'm going to use, and I have the years here. Now watch this. I'm going to create a new sheet. I'm going to call this, let me just call it P&L. Okay. I'm going to call it maybe income statement. Income statement. Then let me expand this. I'm going to have, I have just 2019, 2020, 2021 here. So I'm going to have 2019, 2020, and then 2021. Now I need to put in my values here based on the map. So I don't need to copy, I don't need to start typing one by one. I already have the values here. So I can select on the column D, copy, go to the P&L, come somewhere here and paste. Then I just need to remove duplicates from here. So once I select one cell within this data, I go to data. Under the data tools, here's remove duplicates, map, okay. Immediately, I have a unique list of the various values I need for my income statement. Okay, so I'm going to copy, paste this here. I don't need this column again. I can right click, delete. And then, all right, moving on. So first of all, again, my row 1 needs to be my header. So I need to ensure that row 1 is my header. So I'm going to select row 1, Control B to make it bold. All right. And now I need to put in, of course, if you do any form of income statement, you know that you don't just have revenue, cost of goods sold, blah, 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 and then just have net income like that. There are intermediate calculations that we need to do. So after revenue and cost of goods sold, I'm going to insert. By the way, the shortcut to insert is Ctrl+. Of course, you can just right click and insert. I'm not going to do that again. I'm going to use my Ctrl+. Okay, so under revenue and cost of goods sold, I'm going to type gross profit. Right, that's my gross profit. Once I take my revenue, subtract this, I get this. From my gross profit, once I subtract my operating expenses, I'm going to select this, shift spacebar to select the entire row, Ctrl+. I'm just saying those things so that in case you're here and you like keyboard shortcuts, you can pen them down and you can try them on your own later. All right. So we have gross profit. After gross profit, I subtract my operating expenses. I have my EBITDA, which is earnings before interest, taxes, depreciation, and amortization. Okay. Once I have my EBITDA, I have my D&A here. I can insert, and I can say once I subtract D&A, I have EBIT, which is just earnings before interest and tax. Once I subtract my interest expenses, I have EBT, earnings before tax. Now, there's something I've missed out. Other revenue. Other revenue needs to come under revenue. So watch this. There are many ways of doing this. You can either come here, insert like this. But I don't do that. What I will do is I'll select other revenue, move my cursor to the edge. I'm going to hold Shift and select. Now I can just insert it anywhere. I'm going to insert it under here and immediately. So I have revenue and then other revenue, which I can insert to give me total revenue. Right now, before I go on, I need to say that it is very important that in this stage where you are imputing these values here, it's very important that the value you have here, revenue, is the same exact text that you have here because of the next formula we're going to use, right? If there is a space like this, it's not going to work. For instance, if let me copy this and paste it here. This is revenue without any space, okay? And this is revenue with a space. If I just go to a cell and say equals this, and I press enter, I can see that this is false, telling me that these two values here are not the same. Many times people have that, especially when you download information from an ERP system like Oracle or SAP. Once you download the information, you see a lot of spaces or you need to clean the data first and ensure that they are the exact same. Okay, so you need to clean data first and ensure that they are the exact same type, the exact same characters. So I can either come here and do like this, or in case you have a lot of spaces, like there's space here, there's space here like this, there's space here, or maybe in between there's too much space like this. And you don't want to have to be doing it one by one manually. You can use the trim function. There's a function called trim. Okay, so if I come and say equals TRIM, I press that. Let me go back. You can see what it says. It says remove all spaces from a text string, except for single spaces between words. So if I press trim and I select this and I drag down, notice that all the unwanted spaces have been removed. I can just copy and then come here, right click and paste as values. Okay, now I can let go of my formula. So that's just on an aside. Okay, so we have our revenue, our other revenue, total revenue, cost of goods sold, we have the gross profit, we have operating expenses, then EBITDA, D&A, then EBIT, the interest expenses, then you have the EBT, taxes. Once you take your taxes away from EBT, you get your income, your net income. Okay, so now we can use this mapped income statement to create the P&L. But before we do that, let's do a little bit of formatting, okay? First of all, I know that we are going to have forecasts. So I need to indicate that these are actuals, and then here we have the forecast. Let me just put it here. From 2020 to 20, let me just say equals this plus 1. So after 2023, I can drag it down to 2026, 5-year forecast. I'm going to insert above, and then maybe I can copy this, paste this here, remove this. Then for this first 3, I'm going to say actuals. So we know that those are actuals. Now, like there are many ways of doing many things in Excel. So people will select this 3 like this and go to home and click on merge and center, which is fine, right? The only problem is that if I press my control spacebar, let's say I want to select this column. If I press control spacebar, it has to select the 3 columns, and I don't like that. So what I do is I select the columns like this. I right click, go to format cells. Let's format cells here, right? Or I can just press Ctrl 1. The same thing will come here. Then you go to the alignment tab. Under the alignment tab, you have the horizontal. I can click on it and change it to center across selection. Once I click on that and I click on OK. Now, it looks like it's merged, but it's actually not merged. You can select each individual cell. I personally prefer this. So here I'm going to type forecast. Select these 3. Do the same thing. Ctrl 1. Center across selection and then OK. So I have it here. So I have my actuals here. I have my forecast. I can select all this to the end and just put in a left border. So now I can see that whatever is here is actuals. Whatever is here is forecast. Now let's format this some more. Let me just select this and make it bold. As preference, this is my preference. Now, when it comes to formatting, you can choose however you want to format. Some people like to, insert something, a space here, like this, space here, and whatever formatting your company or your firm prefers is fine. Let me control 1. For me, I like to keep everything simple and compact. Okay. Sorry, just checking. Hope you can still hear me.
Yes, we can
sir.
hear you.
Okay.
Yes, sir, we can hear you.
Yes, we can.
Just make sure that I'm not talking to myself.
No, we are enjoying you.
All right, thanks. Now let's get back to the analysis. Okay, so I have the years and I have the values. Okay, let's I'm still formatting this. Let's format the headers, select your headers and Control B to make everything bold. I personally like to format my headers by giving them a dark background with white color. You can format this however you like. There's no rule, there's no formula on what works and what doesn't work. This is me, right? I'm going to go to home tab, give him this dark border and white font. And once I do that, I have this. This is how I like to format. Okay. Now, the next thing is to format my subtotals. I have revenue. I'm going to add other revenue to it to get total revenue. I'm going to make this entire place bold, and I'm going to give it a top border. By the way, you notice that I have some things here on my quick access toolbar. These are the things I use a lot, right? So generally, I like to hide my ribbons. I don't like this ribbon. You can see the amount of space that's already chopped out of my available space. So I don't like to see it. To hide the ribbon, you can either double click on any of them or you can press Ctrl F1. That will hide your ribbon. So to to add to the quick access table, just right click and you see it here. Add to quick access table, that's it. So total revenue, I'm going to select this. This is subtotals. I'm just going to give it a top border. That's that. Next, gross profit. Now I can see that I want to this total revenue format. I want to do the same thing for gross profit, for EBITDA, for EBIT, for EBT. So I can select, go to home and click on format painter, right? I personally don't really use this though. I prefer to use paste special, but let's just use this for now. I'm going to click and paste this once. Now you can use format painter multiple times if you double click. Now I can click on it. Oh, sorry, I'm supposed to select what I want to format first, what I want to copy. I want to copy that formatting here. Come here, double click, then click, 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 click. And let's just say click here too. Although I'm going to put a double line, so I'm going to select my net income. I'm going to come here and make it tick bottom border. So now I have my formatting. Next thing I want to do, by the way, we're still in tax 2. Wow, this is the one. Okay. We're still in tax 2, creating the P&L. I'll try to rush it. So next thing I want to do is to put in my formulas, the total formulas here. I'm just going to come here and say equal sum of 1, 2. Why am I not using this one as this? Because I'm going to make sure that my total revenue has to be my revenue plus total revenue. Control enter. Now put in this. I'm going to go to gross profit and I'm going to take the sum of revenue and cost of goods sold. That gives me this. I can just copy. This is the same format. Copy, paste, paste, paste. And then here, I'm going to paste as formulas. I can either right click and paste just the formula so that I don't remove the formatting that is there. Let me double click and I can see speaking correct. Yeah, so I have my subtotals. All that remains now is to put in these values for the actuals before we now forecast the rate forecasts, right? Let me just format
sorry, I think
yes.
Yeah, the gross profit. I think we need to adjust the formula.
Sorry, I didn't get
total revenue. My total revenue minus cost of goods. So you still maintain some instead of
yeah. Okay, very good question. He's mentioning that why did I put some here? Because I'm going to ensure that my cost of goods sold has a negative number.
Negative,
yes.
Okay.
So now some people don't like it like that. Some people like to see positive all through. It all depends on how your company or the firm you're working with, how they choose to report. All right.
Okay.
Yeah. All right. So now I can just select everything, come to home and click on my comma here, and that's more like it. So now I need to put in a formula. I'm going to write just one formula here that is going to come to this place and pick the amount. Oh, something is missing. Something is missing. I'm supposed to type N. No, let me just say NGN in millions, so that we know that this is actually the information here is in millions. Okay, so I need to write a formula that is going to go and pick the revenue for 2019, and I'm going to use the sum ifs function. So it adds the sales specified by a given set of conditions or criteria. So tab. Sum ifs has some arguments. The first argument is the sum range, meaning where is the data I want to sum? Well, I want to sum the data in column C. That's the amount. So I'm going to click on column C. Right? Now it's very important. Notice that. Let me go back here. Let me press escape. Once I type this formula, I'm going to write one formula here that I'm going to copy across and down. The same formula across, the same formula. I'm not going to change this formula. So I need to write this in a way that if I copy it to the right, I need to lock my cells well so that if I copy it to the right, it doesn't move. And if I copy it down as well, these guys don't move in. So as I'm going to be selecting the references, I need to be asking myself, how do I need to lock my cells? Very important. I'm going to say equal sum ifs tab. Sum range. The sum range, let me just press Ctrl this, is column C. I'm going to copy this formula to the right. So because of that, I need to lock this column. So I'm going to press F4 to lock the column. Okay, that's my sum range. Comma. The next argument is criteria range 1. There are 2 criteria here. The first one is revenue. The second one is the year. So I can use criteria range 1 as revenue. I'm going to click Ctrl Shift this to select the entire column as my criteria range 1. F4 again to lock it because I'm copying to the right, comma, criteria 1. I'm going to go back to my P&L. My criteria 1 is this guy here. Okay, that's my criteria 1. Now, most times people just once you are writing a formula and you move between sheets, Excel will put this sheet reference here for cells that are on this sheet. For cells that are on this sheet, I don't need this P&L. What's it called? So I can just delete it. I don't need. I just need the A3. Okay. Now, if I just press this and I press enter, this gives me total revenue. If I come here and I filter revenue, if I add up these values together, oh, sorry, yeah, I can see 7244. That's the value I have here. It is summing the amount for where the map is saying revenue. But I don't want the total. I want for only 2019 or for 2020 or 2021. That's where I need to add in another criteria. But notice, I'm going to copy this formula to the right and I'm going to copy it down. So that means this cell A3, I must lock column A, but not row 3, because I want 3 to change to 4 as I copy it down, but I don't want it to move from A to B. So I'm going to click on F4, F4, F4. That locks row A, okay? That locks column A rather. Comma, the next criteria is the year. I'm going to come back here, select the year. Of course, I'm going to press F4 again to lock it, comma, then criteria 2 is the year here. Of course, again, I don't need this P&L that is showing here because I'm on the sheet, so I can delete this. So B2, I'm going to have to lock row 2 so that if I copy it down, it doesn't move. So I'm going to press F4 and F4, and that's fine. I've locked row 2. Once I press Control Enter, now I can see revenue in 2019 is 2380. I can click and drag right, and I can see the revenue values for 2020 and for 2021. Let me expand this. Okay, now what I need to do is to click and drag them. And now that gives you the other revenue. If I double click now, you can see it's looking at other revenue here and 2019. That's why I said it's very important. If I come here and I put a space, it's not going to pick it anymore. So the values that you have to be identical to the values that you have here. Now, there are many, so people prefer to have schedules. So they would do like this revenue now, they will copy it like this, you know, put it in a new sheet and everything. But I mean, sometimes you just want to be able to link everything directly to the document. Okay, so let's go to cost of goods sold. I select this, I copy, and I paste it here. Now this is where what you said comes in. This is positive, so I need to make this negative. So I go into the formula, I put a minus before it, and I Control Enter. And that gives me the right gross margin. So I can see my revenue values, subtracting my cost of goods sold, I have my gross profit. So I copy this, I can just copy this one, so every other thing is going to be negative. And voila, I've created my actual income statement. Okay, let me Control C. Now, before I continue, I need to quickly explain that sometimes you want, what we want to do now, after we've created the actual income statement, we want to forecast, we want to create forecasts. Now, sometimes when you're working with data like this, you can use scenario analysis, especially when you're forecasting. Sometimes they'll say, if there's a base case, what will happen? If there's a best case, what will happen? If there's a worst case, what will happen? All right. So we're going to build in this scenario analysis into our forecast model so that if I change the forecast, if I change the scenario rather, the entire forecast will update. And we're going to look at that, how we're going to forecast each line item one by one. First of all, let me just insert like maybe 3 new lines. 1, 2, 3, 4. Okay. I want to get rid of all this formatting. The fastest way to do it is just to copy an empty cell that has no formatting, select all this and paste on it. That gives it the formatting immediately. Okay. I'm going to come here and say maybe income P&L. Let me make this bold and maybe give him a nice blue color and another line. Okay. Now I'm going to come here and say scenario. Okay, let me make this bold. Then I'm going to come here and maybe make this, let's give it this color and then give it forward. Okay, now in this scenario, I want to be able to select between best case, base case, and worst case. Okay, so let me go to this sheet here and call this, just type here, scenarios. Okay, so the first scenario is the best case. Next one is the base case. The last one is the worst case. I can spell the case. Okay, now I have these scenarios. Watch this. I need to come to this. Let me come here. Now I need to put a drop down here so I can select each scenario. So I'll select the where I want to, the cell where I want the scenarios to be. I'll go to data, data validation. This data validation, I'm going to click on it. And I see the data validation drop down. Instead of allow any value, I click on the list and the drop down and select list. Source, I click on source, I'll go to tax formation and select these three. And press OK. And now I can see I can either select base case or best case or worst case. So for some of these, now not all these guys will have best case, or worst case, but for at least most of them, for like revenue, for instance, how are we going to know our revenue? We have a base case revenue, we have a worst case revenue, and a best case revenue, and so on. Okay, so let's look at how we can forecast. To forecast the future, we need to use financial ratios, right? And those ratios come in handy that help us to know what the forecast of the future should be. Here, down here, I'm going to have my drivers. I'm just going to put this bold. So the first line we want to forecast is revenue. How do we forecast revenue? Well, forecast revenue, we're going to use the year-on-year growth. So I'm going to say year-on-year revenue growth. Okay, year-on-year growth, you can calculate year-on-year growth. I need to take the current year, divided by the previous year, and subtract 1. Okay, so that's x1, it'll be x2 divided by x1, then minus 1. That's basically how to calculate year-on-year growth. Okay, so now, obviously, I can't calculate year-on-year growth for 2019 because there's no 2018 data. But I can come here and calculate the percentage. Let me put this in percent so that it's clear. Okay, so to know how our revenue is growing year on year, so I can come here equals 2020 revenue divided by 2019 revenue minus 1. Control enter. And this is, I need to format it as a percentage. I can go to home and click on this percentage sign. I can press Control Shift 5. So this is 2%. Let me increase the decimal. Okay, it's actually 1.5%. So if I click and I drag this way, I can see that this is actually 0.9%. But irrespective of the year-on-year growth, we cannot forecast that the revenue value is going to be reducing. So let's assume we're just going to have different scenarios, right? So watch this one. Let me start by calling this revenue. Okay, this is revenue. I have the year-on-year growth, and I'm going to have this selected case here. Okay, and then I'm going to have let me make this bold. I'm just going to copy this information from here. Copy and paste. So we're going to have a base case, a best case, and a worst case. So we're going to assume, just for analysis, that base case, we are growing by the same 1.5. Let's just say 2. We're growing by 2%. So I'm just going to type 2 and then enter. Now, one of the best practices, right? If you are working in a model like this, one of the best practices is your hard-coded values. Like for instance, if you look at all of these values here, none of them is hard-coded. Every value here is a formula. It's linking from somewhere or anything. Your hard-coded values, you should give it a different color so that people know that this is hard-coded. Okay? So now I'm going to select this best case, worst case here, because I'm going to hard-code the values here. Okay? And I'm going to give them the color. There's this blue color that most modelers like to use. I think it's this one here. So you can just put OK. So that's the font column. Is it showing? Let me so let me just type, let me first type 2%. This is 2%. Okay. Let me go to home. Yeah, home. And then percent, then increase the decimal place. Okay, fine. So let's assume that our base case is that base case revenue will grow by 2%. Best case revenue will grow by, let's say, 4%. Then worst case revenue will grow by, let's say, just 1%. Now, of course, you know that this is a model. So that means that the what's it called? The values will change as you move. You can say, okay, in 2024, I'm expecting something to enter, we're expecting to expand or something. So I'm expecting my revenue to move by maybe 50%, you know, whatever catches your fancy. This is your model, but your assumptions have to make sense. So let me Control Z. Okay, I don't even need to select Z, I can just put it here. So now, which of these are we going to select? This is worst case I selected here. So I want Excel to be able to pick out the worst case from here for me, right? So that if I change this from worst case to best case, it's going to pick it up for me. This is where we're going to use the function. You can use so many functions, so many. Let me see. Okay, I'll do one with index and match. I'll do the other one with choose, so that we'll learn the two of them. We can also use VLOOKUP, you know, but let's start with index and match. So index and match, how does that work? How does that work, rather? We want to, what match does is if I say equals MAT, match returns position. So if I say match, it has three arguments: lookup value, lookup array, and then match type. So if I say look up this guy in this range and give me an exact match, watch this. So lookup array is the range, the lookup value is this guy. If I press comma, the match type, I want an exact match, so I press 0 and I close. So this is 1. This tells me that best case here is position 1. Okay. If I change this to base case, it becomes 2. If I change this to worst case, it becomes 3, and so on and so forth. That's that. Now, what does index do? If I say equals index, index will return the value or the reference of a cell at the intersection of a particular row, blah, blah, blah. The cocoa of, in this case, what we're trying to say is that index would, if I say, the first thing is the array. This is the array here, right? And I give you a number like 3, and I close. It's going to give me the third value there, basically. That's what index does. If I say, instead of worst case, change this to 2, it's going to give me the base case. So as you can see, based on what you pick here, you can actually make this variable, okay? So what I'm going to do here, I'm going to say equals index. The array, I want to pick the list of the 3, let me click this area so you can see. So the array is this range here. I want to pick one of these rates. But how do I know? I want to know based on what is here. So I'm going to press a comma. The row number, that is which value do I pick here? I need to know what has been selected. So I'm going to use a match here. So match, lookup value, the lookup value is this value here. I'm going to copy this value to the right. So because I'm going to copy this value, I need to press F4 to lock it. Okay, comma, the lookup array is over here. Again, I'm copying this to the right. This one, this range here, I can allow it to move, but this range must not move. So I need to F4 to lock it. Okay, comma, match type, I want an exact match. I press 0, close the match, and then close the index. And now I can say this is not formatted, Ctrl-Shift-5, and then maybe come here and then increase the decimal place. Now, if I can see that I'm expecting the worst case. So the worst case is that my revenue will grow 1% year on year. If I change this from worst case to best case, revenue will grow 4% year on year. That's the index and match formula. We're going to look at another example for maybe for the next one we want to do. So now I know that my revenue is growing year on year by this amount. I can just grow this now. So to grow something, you multiply by 1 plus the growth rate. That's how you grow something. So to grow 2021, I'm going to say equals this value times, open bracket, 1 plus, okay? 1 plus what? This selected growth rate. I can close and that gives me this. So it has grown. And now I can just select this and F2 Control Enter. And now I've grown my revenue values. I'm already filling in my forecasted income statement already. Okay, that's my revenue. Now, other income, this is revenue that is not based on the business. So most times we just like to keep it flat. Most times we don't forecast, or because it's not your business. It's not, maybe you're selling your job is you have a shop and you're selling goods or whatever, and then for some reason somebody out there said and they put their own shop there. It's not your own business, but you're just making a little bit of commission from the person or something. So we can't really forecast this. We're just going to keep this flat at the average of the past 5 years. So I'm going to select this equals average. I'm going to select these 3 numbers. Now I'm going to lock them because I'm not expecting any movement like that. Close, Control Enter. So I'm just expecting that it's going to stay flat. I'm not expecting any increase in other revenue. So now this is one way. Now your business case could be different. It could be that you are expecting that, oh, something's going to happen in the future. So you expect that you can basically, if you need to model it like this, you can model it this way as well. Now, as you can see, as I'm changing the scenario, the forecast is changing. Good. Next thing is to forecast other line items. Cost of goods sold. How do I forecast cost of goods sold? Well, I'm going to steal this, copy, and paste here. I'm going to call this cost of goods sold. Hopefully I can spell it. Okay, let's make this bold. So for cost of goods sold, how do you forecast it? I'm going to write another formula, so let me just remove it. You forecast cost of goods sold. Another thing is that as I scroll down, I can't see my headers anymore. So let me, I want to even start from here so I can see the scenario I'm picking. I'm going to click on this, go to cell B5, view, free space, and then free space. So now if I scroll down, you can still see the headers and the scenario I've chosen. So now, cost of goods sold is forecast as a percentage of revenue, because you are always looking at, if you're not selling, you cannot produce. So let's find what the actual was, right? So I'm going to take equals cost of goods sold and divide it by the revenue. And I can see this is 56% and 57%. Okay, so I can see these numbers here. That gives me an idea. By the way, I don't like this minus, so let me just put a minus before it. So that gives me an idea of, okay, if my revenue, if my cost of goods sold is, you know what, I don't like the fact that this is breaking here. Let me put it here. Let me remove this on free space and then free space. Okay, this is better. So now I can see that my cost of goods sold is 56% of revenue and 57% of revenue. So now I can say, okay, let's assume that the base case, if I look at the average of these two numbers, the average is about 56%. So let's be conservative. Let's just 56%. Okay. I can say best case. Let's just assume maybe 59%. Remember, this is purely you looking at your business and saying what makes sense, what doesn't make sense. You need this information as historical, so that you can know how to forecast. In the past, as a percentage of revenue, our cost of goods sold has been this. So I don't expect our numbers to become significantly higher or lower. All right. Oh, sorry, I'm making an error. For the best case, I'm expecting lower cost. So that means for the best case, I can forecast instead of 56, let's use 53. Okay, because this is cost, so I'm expecting lower cost. Lower cost means it's good for me, so that's best case. For the worst case, I'm expecting higher cost. So let's say maybe 59 here. Okay. Now again, instead of me to use this index and match, I can use another formula here. I can use the choose function. How does the choose function work? Let me type choose tab. Okay, let's go back and read the screen tip. It says chooses a value and action to perform a list of values. This is not helpful. So let's just explain what it is. Choose has an index number. And based on that index number, it will give you either 1 or 2 or 3. Let me give an example. If I say, let me just type something here, equals choose. Wow, 1 o'clock. Hey, hey. Okay, if I say choose and I type 4 here, 3 here, right? And I put maybe in text, I type dial, I type a number, I type Femi, and I type true or something. Okay, now what this is saying is the first argument here is the index number. After the index number, you have a series of values. So based on this index number, you will now choose the value that you want. As I've chosen 3 now, Excel is going to give me 1, 2, 3, Femi. So if I press enter, I'll see Femi. If I change this from 3 to 1, it's going to give me the first value, dial. That's how it works. So in this case, I can use choose equals choose tab. My index value, again, I need to use that my match to be able to get what the index, whether it's base case or best case or worst case. So equals match. See, tab. Lookup value again is this. I'm copying to the right, so F4 to lock it, comma. The value lookup array is this value here, F4 to lock it, comma. Match type 0, close. Okay, then that's my index number. This match, if I click on this and I press F4, you see that it is keep showing me 2 because this is base case and base case is the second value there. Control Z to go back to the formula. Okay, if I comma, so if it gets 1, give me click on the choose. I don't want this. Let me move this thing away. So the first value, you can see value 1 is this, value 2 is this, value 3 is this. Close and enter. So it is basically the same idea as if you had used this same index and match. Okay. Index and match works best when you have a long list. Let me move. Time is going. So again, I can see if I change this base case, I can see now I'm using this and so on and so forth. What's all this? Okay. So now I need to forecast my cost of goods sold. Now notice I'm using percentage of revenue. Let me change this to off. Wow. We might need to continue this. Okay, let's just see where we get to by 2 o'clock. Percentage of revenues, I'm going to say equals. I'm going to start with a minus. Remember, because this is cost of goods, so it has to be minus. I'm going to take this percentage and multiply it by the revenue value, and that gives me this. And I can F2 do this. And now I've forecasted my cost of goods sold and I've forecasted my gross profit. The same applies to operating expenses. I'm not going to waste time on that. I'm just going to copy this range, come here and paste it. I call this operating expenses. So as a percentage of revenue, it's going to be equal to minus the OPEX value divided by the revenue. Control enter. So I'll be saying an average of what? To shift this. An average of 47. 47. So let's use 47 as the base case. Wait, let me double click to be sure that I pick the right thing. So OPEX as percentage of revenue. Okay, that's fine. So escape. So we have 47 here. Now let's assume that best case it goes down to 44 or something. Remember, this is based on your assumption. Worst case, let's say it increases from 47 to 50. Okay. Now I need to calculate my forecasted OPEX. I'm going to select this minus. Select this value and multiply it. Sorry, multiply it by the revenue. Notice that I'm not using this other revenue because other revenue is not part of our core business. Our core business is based on revenue. So I have so I forecasted my operating expenses, and now I forecasted my EBITDA. And this is sorry, I have a chart here. Can we have access to the recording after the session? Yes, you can. Yes. But you have to request for it. If you want it, please, you can chat up the number that gave you the link and ask for it. So that it's actually those that want it that will have access to it. Okay. So this is EBITDA. Now I need to focus my D&A, and I need to focus my interest expenses. I need to focus my taxes. You know what? I can actually focus my taxes quickly. That one is not hard because from here I have my tax information. They told us that the tax rate is 35%. So I can come here. But one of the things in modeling that we always do is that you don't tax a company that is not making positive EBT. If the EBT is not positive, there's no point of taxing the company. So I can just come here and say, use an if function equals if tab. If the EBT is less than 0, that's the logical test. If this value is less than 0, comma, what's the value true? Give me a 0. That is, don't tax the company. If not, take this value and then multiply it by the tax rate. The tax rate is here, is 35. Okay, I select that tax rate, F4 to lock it, close, control, enter. Now, there's something I forgot to do. I need to come to this formula here and put a minus because it's negative. And that gives you this. I can come here, F2. So my income statement is almost, my forecast is almost complete. All that remains now is I need to forecast my DNA and I need to forecast my interest expenses. I can't forecast those two without doing my fixed asset schedule and interest expenses. Hope we're all together. Please, I need a audible. I need to be sure that all of us can hear me. And everything I've said.
Yes, yes, fine. We are together. Yes.
Sorry?
So especially the lookup part.
Okay, it's clear. Very, very good. Okay, moving on. And of course, as you can see, because the model is flexible, if I change this, everything is changing. Okay, now let's look at the DNA. Let's go back to the tax information. We have created a P&L. We have not completed it, but we'll complete it as we move on. Now let's create. Yes? Somebody asking a question. Okay, let's move on. Now we need to create the balance sheet. Beautiful. Now this is, let me just create a new sheet and call this BS, not bullshit, balance sheet. Now I have, let me control this. This guy is disturbing. Okay, so I have balance sheet of 2019 here. I have balance sheet of 2020 here, and I have balance sheet of 2021 here on different sheets. The first thing I can do, right, is to combine all of this into one single sheet. That's the first thing to do, so that it will be easy to write your formula. Okay, I have different balance sheets, and let me just check all of them balance. Okay, this is 9321, 9321. This is 948, 948. This is 122, 122. Beautiful. So all of them balance. So I'm just going to create a new. This is income statement mapping. This is balance sheet. So let me create a new. What do you call this output? Okay. Output here. So this is income statement mapping, right? Let me create a new sheet like this. Let me just come here, click on this. I'm going to call it balance sheet mapping. Okay. So I have my source data, I have my workings, and I have my outputs, and they're all linked. Beautiful. So now let's take the first one. Let me just copy this entire. By the way, there are many ways of doing this, but this is just like the way I see is easiest. You know, to make your work so much easier. So this is the first one. Go to 2020. Copy. Paste it. Okay. Go to 2021. Copy. And paste. Now I can see something. Normally I would have actually wanted to do some abracadabra, but I can already see something going on. First of all of these three sheets, these three values have the same exact function. Sorry, I said function. Format, yes. We have trade receivables ending in 7. This one is ending in 14. This is ending here. So basically the exact same format. Since I have all the data here, I can just, all I need to do is what this. I'm just going to delete this and delete all this. And now I have something beautiful. Let me delete this extra line. I have something beautiful. With just a few clicks, no stress. With this guy here, I can create my balance sheet because I have my 19 data here, I have my 20 data, I have my 21 data here. By the way, for balance sheet, I don't need all this. I just need the headers, right? That's what I need. So let me come here, go to view. By the way, I think somebody used the white color here. Let me remove that. Go to home, color, make it no fill. Good, that's better. So come to A, go to view, freeze panes, and then freeze panes. Okay. Now I just need the let me scroll down, let me see. I have my assets, I have my financial liabilities, my equity. Okay, so I just need to copy 1, 2, I'm holding control. 3, 4, 5, let's say 6, 7, 8, 9, 10, and 11. Let's say 12. I copy, come to the P&L balance sheet from here, and I paste. I can remove all the formatting here, take this code, remove the what's it called here, and now I have the building blocks for my balance sheet because these are the guys I need. So let's steal from here, just copy, paste it here. I'm going to change this to balance sheets, or I think they call it statement of financial position. Let's do more statement of financial position as our SFP. Okay. Let me steal this format as well. I'm just going to steal this. Oh no, I don't even need this guy. Let me just steal something like this. I'll paste it here. Okay. And let's delete all these guys. Okay, so I have a nice format I can use. I'm going to just so now first thing is I have to list my assets. So in this case, I mean we have just one PP&E, so it's not like we have a lot of normally you, of course you do your non-cash, your cash, whatever format is easier for you. This is just a simple demo, so it doesn't have to go as, just get the idea of how these things work. All right. Okay. Well, since we're going to do working capital, let's separate. So I have my assets, and then after under assets, let's have current assets. Okay. That's where you have your trade receivable, you have your inventory. This is non-current, so let's move it away. You have cash, you have other assets. Okay. So let's freeze this as well. View, freeze panes. Okay, delete this guy. All this total current assets. Okay. Now let me just copy. Okay, let me start. Most times you don't need to waste time if you already have a model. Just call this non-current assets. Non-current. And that's just PPE. Can paste this here. Delete this. Call this total non-current assets. Okay, so that's my assets, and I can call this here total assets. Okay, so that takes care of that. Now let's start with current liabilities. Let me call these liabilities and equity. Let's start with current liabilities. We have trade payables, provisions, financial liabilities, and we have other liabilities. Okay, we have equity. Okay, let's just assume that this other liabilities is a long-term liability. But we have just one, so I think we can just do this as liabilities and equities. So after other liabilities, I have total liabilities. Okay. Then we have equity, then we have liabilities and equity. And of course, after this, you can now put our check here to ensure that total assets is same as total liabilities and equity. Okay, so now let's format this. First one is to ensure that I have my distinction between the two. Let's drag it from here. Left. Okay. Next is my total current assets. Let me steal this from here. I'm just going to copy this, copy. Now I'm going to paste as formats. So I can use my Alt ES to open my paste special. Then I press T to do format and I press OK. I use that a lot. So, okay, let me put another line there. Click here and just put top and bottom. That's fine. Copy and put the same thing here. But here, I'm now going to put in a top and tick bottom. Top and tick bottom. That's good. So I have my total current assets, I have my total non-current assets, and then I have my total assets. Okay. For liabilities and equity, I have my total liabilities. Let's copy this. .est. Copy this. Liability and equity .est. Good. So now I can start my formulas. Here is going to be total of all this equals sum of 1, 2, 3. Okay. This is just going to be equals this. In fact, do we need to even do this? This is, let me just delete all this. This is not necessary. PPE is fine. So after total non-current assets, we have PPE, and then we can now add it to get total assets. Okay. Here we have total liabilities. Then we have liability and equity. Okay, and then we have our check. So our check is going to be equal to this must be equal to, or let me just say this minus this. Okay, that's the check. So we have created the body is to give it some bones and some flesh. And good news, we already have our mapping here for the balance sheet. So I just need to use this mapping. And as God will have it, we have 19, 20, 21. So I don't need to stress myself. And I already have my trade payables, provisions, the exact same names here, no space, no nothing, because I copied and pasted exactly. So all I need to do, yes. Is someone asking a question? Okay. So all I need to do is to put in my formula here and copy it across. Again, because sum ifs tab, the sum range is going to be this balance sheet mapping. In this case, I have 3 different sheets. I'm going to select this range. Now, if I copy this formula to the right, I actually want this range to move to the right. So I'm not going to lock it. Okay, comma. My criteria range, I'm going to select this, F4 to lock it, comma. My criteria is going to be this. Now, again, I don't need this BS $sign, I'll be DS, whatever. But I need to lock column A because I'm copying to the right. So F4, F4, F4 one more time. And that's good. So I can select all this, F2, and I have this. Let me copy this formula, paste here, and paste here. Okay, so something is obviously wrong because it's not time, which is good news. So now we can do one of the most beautiful parts of accounting is to check where you have made an error. And hopefully you can spot it early. So let's see, trade receivables, inventory, cash. Let's see our total assets. We have 88. Most likely there's something missing. Let's see what it is. Oh, there's other assets here. That's what I missed. So I need to come and insert it. I'll just put it before cash. Other assets, copy. I'm going to insert it here. And by the time I drag this down, okay. So there's still something missing. I think there should be there's other liabilities now. So we have inventory, PPE, cash, other assets, provisions, equity. Okay, so something is missing that has these values. Let's see. This is 97, this is 9804. Okay, so this is 9804. So let me go and check my liabilities and equity. This is 932. Okay, let's look at it one by one. This is 68. What do I have here? I have 68. Okay, this is, oh, I see. Beautiful. Can you see where the error is? As I did in the exam. So what has happened is this is other liabilities, and I have other liabilities here. So he's picking this guy twice. And this is other assets, and this other asset here. So it's picking this other asset twice because I picked that column. So I can just say other liabilities and just maybe put something here. Another assets, put something here. Now, one thing I can even do is to ensure that in this column there are no duplicates. So I can select the entire column, go to home, go to conditional formatting, highlight cell rules, and duplicate values. So any duplicate values will show. Okay. Now there are no more duplicates. If I remove this guy, I can see that this will tell me now, this guy is calculating wrongly. Let me just put this dash here. Okay. So by the time I come back to my balance sheet, good, it balances. So that is our actual balance sheet that we've brought in the actuals. So what we need to do now is to forecast our balance sheet items. How do we forecast balance sheet items? Well, very, very simple. We need to use what we call the days, especially for the current assets. We can use the days, that is for, not just for current assets, we have 1, 2, and 3. These 3 guys, they are the major working capital items, and each of them has an equivalent days calculation, right? So let's come here and type drivers. For trade receivable, I need to calculate what we call the DSO, that is days sales outstanding. So what this does, let me make this one maybe to the side. So what the DSO is looking at is, you're asking yourself, how many days does it take for my receivables to turn to cash? That's the question you're asking. How do we get that? Basically, if you look at 2019, if you look at the P&L in 2019, we sold 2.3 billion, or 2.4 billion, yeah, because this is the million. So this 2.4 billion that we sold. However, out of 2.4 billion, at the end of the year, remember that balance sheets at the end of the year. So at the end of the year, 143 million out of this 2.4 billion was not paid off. So we can use this value to calculate the turnover, and we can use the turnover to calculate the days sales outstanding. So basically, days sales outstanding is the receivable value divided by the revenue multiplied by 360. Okay, or you can use 365, it depends on the amount of years that you are considering. You are basically taking a balance sheet item as a percentage of the corresponding P&L item, and then you're multiplying by 360 to know how many days it takes you in a year to collect your money. So what am I going to do for DSO here? I'm going to say equals trade receivable. So if we take the average trade receivable, in this case, we just use the trade receivable, divided by the revenue value. Okay, and then I'm going to multiply by, let's use 365. And I can see for, it means in 2019, it took me about 22 days to collect money from those that owe me. In 2020, it became worse. It took me 23 days. In 2021, it became worse. It took me 25 days. So now we can forecast it by assuming a number, or you can just take, so there are many ways of forecasting. You can assume that, hello? Please, can we be on mute? Oh? Okay, so that we should only unmute if we have questions or if we have comments. Okay, so as I was saying, we can assume different things. We can assume that, okay, we're going to continue to take the average, which is, what's this thing? I need to remove this thing onto sheet H. Okay, which is 23.58. We can use that average, but we can say, okay, we're going to use this last value here and, forecast that will be continue, or you can just assume that we're going to grow this number. Whatever the business decides, your role as the modeler is to think what makes sense for this business, or what's the reality of this business. So in this case, let's just assume we're going to take the average. So I'm going to say equals average of these numbers, and I'm going to press F4 to lock it. Because I might copy this formula, then let me press F4 again to lock the columns. Okay, and I press enter. So now I'm assuming that going forward, our DSO driver is going to be this amount. Okay, let me drag this down further. left. Okay, so I'm assuming that going forward, our DSO is going to be this. So because I'm assuming that I can now calculate my revenue, my revenue, my trade receivables by taking this number, right? By taking this number divided by 360 and multiplying it by the revenue value. Here, what we did was we took the trade receivable, divided it by revenue, multiplied it by 365. Here, to get it back, what we're going to do is we're going to take the number of days. Let me put it in brackets, days, so it's clear. We'll take this number of days divided by 365, which is the percentage. Then we take that percentage and multiply it by the corresponding revenue. So that's what I'm going to do right here. I'm going to say equals this value divided by 365, right? And I'm going to multiply it by the P&L value that we have forecast. Okay, and I control enter. And I can see I have my estimate of my trade receivables for the year. Okay, this is not formatted. Let's format this properly. Home, click on this, double click here. Okay, so we're good now. All right, so that gives me the forecast of the trade receivables. The same exact thing works for inventory, but instead of using days DSO, we are going to do what we call DIO, where we will use the cost of goods sold instead of the revenue, because inventory and payables have to do with your stock, which is your cost of goods sold, whereas your trade receivables has to do with your revenue. So here we're going to do the exact same thing to calculate DIO. It's going to be the inventory value divided by, I'm going to put a minus before the formula so that it doesn't give me, divided by the cost of goods sold value for 2019 multiplied by 365. And that gives me our days. So what this means is from when we ship the product into our warehouse to when somebody will come and pick it, it takes 22 days. That's the meaning. That means basically products, and I can see that these days are increasing, which is worrisome actually. If you're an analyst and you see that your DIO days are increasing, it means that your products are actually spending more time on the shelves. That's the meaning. So before, in 22 days, you would change your inventory. Now, you are changing your inventory in 29 days, which means you are basically holding up one working capital. So you need to ask, why am I not selling? Why is my inventory not pushing? Okay, that's that. So to find the inventory, the exact thing, I'm just going to assume that we're taking the average again. All right, so you can assume anything. Notice that I froze only the columns. That's why I could copy the formula down. So I can just take these same values. And I think, no, I can't do that. So let me take minus, take this value, divide it by 365. That gives you a percentage. Then you multiply it by your cost of goods sold. And that gives you your estimated inventory for the forecast period. We're getting somewhere. Next is other assets. Other assets, other assets and other liabilities, those ones, they are not core working capital items. So you can just format estimate them as a percentage of revenue, you know. So I can say other assets as percentage of revenue. Okay, so that means we will keep all those small assets as we make more money. Or if we don't make more money, we will not keep them. Okay, so equals this divided by the revenue value for 2019, and that's this. Let me format all this as a percentage. Okay, so this is 2%. Let me increase the. Okay, so it's about 1.9. Let's just use 2%. Let's just use 2% since we are not sure. So we can now take this value. Notice that this is hard coded, so I need to come and give it that blue, what's it called? Format in there. So now I can come to other assets and say equals this times the revenue value. And that gives you your forecast other asset. Now, cash is the last thing that you always focus. Anytime you're building a model like this, you don't focus cash until you are done, because cash will be picking from your cash flow statement. And for you to do your cash flow statement, you must have forecasted so many other things, right? So cash, I'll comment to that. PPE, we're going to create the next we're going to create what we call a fixed assets roll forward, or a fixed asset schedule. That would give us our PPE value. So, but for now, let's leave it. Trade payables, okay. So we can, let me in fact insert something below this guy. So for trade payables, we have days purchase outstanding as days, right? And just like inventory is the same thing, I'm going to take my, let me put a minus, my payables value divided by my cost of goods sold and multiply it by 365. 365. So what this means is that it takes us about 18 days in general before we pay our supplier. Because trade payables means we're owing, right? So if I calculated this number is telling me that generally we have about 18 days credit to our suppliers. So look at this business now. It takes you 22 days to sell your product. It takes you about 25 days or so, or 24 days to collect money. Whereas it takes you only 18 days to pay back. This, you will have what we call a negative working capital cycle. Because working capital cycle, let me just complete that one here. Let me call this working capital cycle. Is your DSO plus your DIO minus your DPO. DPO. Anyway, so what this is saying is, when you buy your product, right? Your product will stay on the shelves. Like in 2019, your product will stay on the shelf for 22 days. Now, customer A comes and buys the product. It then takes that product 21 days. It again takes that guy 21 days to pay you. So from when you bought the product to when you collect money, the total is what? This stuff should stop blocking me. Total is about 44 days. However, you don't pay your supplier immediately. You pay your supplier after 17 days. All right. So if you have, this is maybe, let's call this is DIO. This is DSO. This is DIO first. It stays in the shelf. Then after that, you sell. This is your DSO. Then you now have your DPO somewhere here. This is DPO. Sorry, DPO. So that means from here to here is actually your working capital cycle. Let me use this block. Okay, you get the product, it stays to this time. Then somebody buys it, the person doesn't pay immediately, you still wait to this time before you collect money. So from year to year, it's called the operating cycle. This is operating cycle, everything like this. Let me operating cycle. That's the operating cycle. But out of this operating cycle, you don't pay your supplier at this point. You will still wait this amount of days before you pay your supplier. So your operating cycle minus your DPO will give you your working capital cycle, meaning that you are basically holding working capital for this amount of days. So if I calculate my working capital cycle here, it's going to be equal to my DSO plus my DIO minus my DPO. So I'm basically funding my expenditure for this amount of days. The goal is to increase this DPO and reduce DIO and DSO. That's the goal. Meaning DIO, people are buying. My shop is moving faster. So within 3 days, I have to do another turnover. DSO, as they are paying, as they are collecting, they are paying, no credit. But DPO, as I'm buying, I will wait before I pay. That's the best kind of model. And that's why most of all these very, very high, that's what most of all these supermarkets abroad, Walmart and the rest, that's what they try to do. They have very low, because you pay cash for the supermarket, but they try to delay how long they can pay for their own goods so that they would enjoy this working capital cycle. Anyway, so we can now estimate this. This is an average of 80. So let's just take the average again. Okay. So based on this average, you can now estimate what our trade payables will be. Equals DPO, which is this, divided by 365. I'm going to multiply it by the cost of goods sold. Then I'm going to put a minus here. And now I've forecasted my trade payables very easily. Now, provisions, we do not really, provision is provision. So we can just take provision, just like this percentage of other assets. You can do whatever. Let's just keep it flat. There's no, let me just click. There's nothing, there's no emphasis on these provisions. Right? Financial liabilities, that one has to have its own schedule. So we get there. Other liabilities, let's assume it's also a percentage of revenue. So let's find other liabilities as percentage of revenue. Okay, so other liabilities, and I'm going to take equals this value here divided by the revenue. Okay, so it's the same about 2%. So let's just maintain the same 2% and then take this 2% times the revenue. And now I've forecasted my other liabilities. Okay. Now that I've forecasted my other liabilities, in fact, instead of doing that, maybe I should just use this average all through so that at least there'll be a difference between this number and this number. So if I just click on this and I click on that way, we'll notice that because everything is already linked, it automatically updates because it's linked properly. So this looks at the average of this, and then this begins to calculate. This picks the average of this, and then that begins to calculate. Okay, so what is missing? We have, let me highlight the pieces that are missing. We have cash. That's the last thing we're going to do. PPE we're doing next. Financial liabilities, we're going to do after PPE. Equity, we'll fill that after we've done that. So once you can fill in 1, 2, 3, we'll do our cash flow. Once we do our cash flow, we'll fill in cash. Okay? Remember that our P&L is not complete yet. We still need to do D&A, which will come from our financial schedule, and interest expenses will come from our financial. Okay, D&A will come from the fixed assets, and interest expenses will come from the finance. All right, before I continue, are we still here? Can we still hear me clearly?
Yes, exactly. We can hear you,
Yes.
sir.
Okay, sweet. All right, 1:30. Okay, let's see if we can finish this before. I'll try not to rush, but so now the next thing we need to do, we've done. Let's go back to our list of steps. We've done P&L, we've done the balance sheet. Now let's do the fixed asset schedule. Good. So we want to do the fixed asset schedule so we can fill in our PPE values and we can fill in the depreciation. Okay, so I'm going to click on. Let me just create a new sheet here and just call this fixed assets schedule. Delete all this. Delete all. Okay, let's just delete it. So for your fixed asset schedule, what you have, you have an opening balance. For most schedules, this is what you have: opening balance. Then you have additions, which will form your capex. Okay. Then you have any disposals that you're doing if you are going to sell anything. Once you have that, then you have your depreciation. Once you take your additions, subtract your disposals, subtract your depreciation, you should get your closing balance. And that is the basic thing that we are going to do with this. So to get, let's quickly format. Let me drag this one down here. Format this, make this bold, make this that. So of course, every opening balance is going to be equal to the previous closing balance. So let's quickly do that. Format everything here, make it, sorry, let me select this. Click here. Okay, so now let's start with, we have the closing balances. What is this? We have the closing balances on the balance sheet. Look at them here. You have them, closing balances here. So I'm going to just take 1, 2, 3 equals and pick this. Okay, these are our closing balances, which are our opening balances. Okay, we have the actual depreciation. For these ones, we don't have any information here. We're just going to leave this place blank. We have the depreciation for 2019. Let's just start with 2020 and 2021. I'm going to go and pick the depreciation values from the P&L. We have them here, the actuals. These are actuals. Okay? I'm going to assume that there was no asset disposal during those years. So we can get the CAPEX. Because CAPEX for that, I'm talking about, I think we wanted to do actual cash flow. This is how we're going to do, but we're only going to do a forecast cash flow, so we don't really need this. But just saying, if you want to get the CAPEX, you know what the opening balance is. The reason why I'm not doing it here is because I don't know what the opening balance of 2019 is. So I'm just going to, let me just give this place a dark color. Like this, okay, to show that we're not touching it. Okay, one more thing, please note that you can see for all my sheets, everything is neat and tidy, and there are no, one of the hallmarks of a good financial analyst or a financial modeler is how neat your workbook is. Things should not be scattered everywhere, one number here, everything should have like a logical flow and a framework to it that is both appealing and useful. Okay, so this figure schedule is actually working. So let me drag it into workings. Okay, now, oh, that yeah, I was trying to explain how to get the CAPEX. I know that opening balance plus CAPEX minus depreciation will give me the closing balance, right? If I say opening this guy plus this guy minus this guy, basically this guy here is supposed to be the sum of all this. So once I have to calculate my CAPEX, I just need to take this man here and say minus the sum of this and every other one here, and that will give me CAPEX. Okay, so it is clear that this guy moved, meaning that my CAPEX here increased because my depreciation did not really move that much. So that's how you get your opening balance, your CAPEX for my previous year. Now we need to forecast. Let me drag this. So now we need to forecast. My closing balance is going to be opening balance plus all of these changes. Control Z. Control Z. I'm going to select this equals sum. Notice that all I did, I just picked, this is from the, remember these three are from the actual balance sheet that we have, okay? So we know that at least these are our opening balances. So now the next question is, what's going to be our CAPEX? Or what's going to be our depreciation? Now there are many ways, we're going to assume that there's no disposal, so let's just say we're not selling any of our assets. So there are many ways of how do I put it, of estimating. The company can say, okay, we're expecting in 2023, there's going to be a CAPEX of 10 million. We're going to buy XYZ machines. In 2025, there's going to be a CAPEX of, if you have that information, you can put it here directly. But when you don't have that information, generally, you can just assume CAPEX as a percentage of either revenue or a percentage of opening balance. We're going to just use opening balance this time. So I'm going to say CAPEX as percentage of opening PPE. Okay, this is nothing about it. This is fixed asset schedule. Okay, so CAPEX as a percentage of opening PPE. So I'm going to take my CAPEX values here and divide them by the opening PPE. And I can see that historically, where are we? Yes. So historically, we've been hovering about between 7 and 10. This is 7, 10%. Let's just assume 10% going forward, you know. Okay. Or we could have used percentage of revenue. You get the gist. The same idea. This is accoded. You know what? Let's just use the average so that we don't have to be using different formats all the time. I'm just going to pick the average of these two. I'm going to F4 to lock it, F4, F4 to lock just the column, then this. I have 8.9 also. So all I need to do is to take this CAPEX value and multiply it by the opening value. And I get my CAPEX for each year. Of course, I can do the same thing for my depreciation. I'm going to say D and A. Let me just, double click and show this D and A. So as a percentage of opening PP and E, I need to drag this formula, this one down, and drag this up. This is minus, so let's make this minus. So this is 6.7 instead. So I'm going to take this equals 6.7 times this, and I'm going to make this minus. And that is how we have forecast our PP and E. Let me insert something here and call these drivers or assumptions or whatever. I'm going to need this extra, let me remove it. So now I forecast my PP and E based on the actual capex. And so now I can take my depreciation values and go to my P&L and link this here equals this, and that is forecast already. So all I remains is, let me remove this guy, so I know that I'm making progress. Yep. So back to the fixed asset schedule. So capex is going to go into my cash flow when I do my cash flow. So let's leave that for now. And this is simple. Okay, I need to go to my balance sheet, and under PP&E, you're going to say equals. I'm going to go to fixed asset schedule, go to my closing balances, and that gives me closing PP&E. So I have my PP&E here. I can click on this and do that. Okay, moving forward. Let me try to see if we can finish this before 2. Next one, I want to look at the financial liabilities. So let me just create a schedule here. This one is kind of interesting. Financial liabilities. We'll call this financial liabilities schedule. I can spell. Yeah. Okay. This is financial liability schedule. So I have the same thing with financial liabilities. You have your opening balance, but this one is additions. That's just loans. This is repayments, and then that gives you your closing balance. Okay. Now, let's look at the drivers. Now, notice that this is very, very important, right? You need to understand how this works. If they gave us in the task information, they told us that whatever is the outstanding debt is to be repaid 10 years from now. Okay, and the interest rate is 9%. Good. Let's see how that will help us to work. Let's go back to financial liabilities. First of all, I don't know what. Let me delete all this. Okay, we don't know what additions and repayments were made from 2019 to 2021. We don't know, so I'm just going to block all these guys off like this. But what I'm going to do, I'm just going to pick the closing balance. What are the balances on the balance sheet, the actuals for financial liabilities? This is what we have. So this is 2019 value, 2020 value, and 2021 value. Okay, so my opening balance definitely has to be this guy here, and then this is going to be the sum, just like that other case. Additions, we're assuming that we're not taking any additional loans. Let's just close them. But we now need to know, what are we repaying here, and how do we calculate our interest? So to calculate the interest, what I need to do is to go into what are the loan information. Let me just copy these guys here and then come and link it this place. I'm going to come back here. Okay. Equals. It's always good to link, so that if you want to change anything, you only change it at one place, right? You don't have to change it multiple times. So I have outstanding debt to be paid is this. The interest rate is this. What's the current balance? Let me see. Current balance is this value, 605. That's the amount that we're currently owing. And they said that whatever is outstanding, which is this 605, has to be repaid in 10 years at 9% interest. Now, assuming that we're paying year on year, right? Because we're paying year on year, I need to calculate how much I'm actually going to be paying in principal and interest together. So I'm going to say, how will I put this now? Cash flow or cash payments. Yes, that's the word. How much is the cash payments I'm making? both interest and principal, because I'm trying to finish out this amount within the next 10 years. So that's going to be, I'm going to use the PMT function. PMT function has different, what's it called? Argument. The first one is the rate. The rate is 9%. Number of periods is 10. I think if we're paying monthly, the rate will be 9/12. More of will be 10 times 12. But because we just own once in a year, so rate is 9%. Number of periods is 12. The present value is negative because we assume that we are owing. We are owing this value. So we'll be paying $94. I don't want the old dollar, whatever. Let me click on it. So this is the amount that we'll be paying for the next 10 years. This is the cash that will be going out. Now, this cash is both principal reduction, which is this repayment here. But let me change it to principal reduction so it's clear. It's both principal reduction as well as interest payments. So what we're going to do now is I'm going to call this here and say period. I'm going to have 1, 2, 3. I'm going to drag down to 10. Okay, we're going to do a mini loan amortization schedule now. Okay, let's still drag this left stuff down. So that's the period. Let me put it here like this. So we have my loan amortization schedule here that we can just link. So we're going to have our cash payments. Oh no, let me start with opening balance. Opening balance. Okay, let me put it here since I already have what's it called? Opening balance. Then I'm going to have my cash payments. I'm going to have my interest accrued, and then I'm going to have my principal reduction. Principal reduction, and then I'm going to have my closing balance. What we're trying to say here is that you're owing 605 million, but you are going to, normally, if you're going to pay this in 10 years, you're supposed to just pay this divided by this, which is 60 million every year. That's what you're supposed to pay. However, you are charged interest of 9%. So you're actually paying, this is the amount that you need to pay year in, year out, so that you will be able to pay both the interest and the principal at once. So we need this table down here so that you can tell us what part is interest and what part is principal reduction. That's basically the idea behind this. Okay, so now I'm just going to Control B and maybe do this here. Okay, now what's the opening balance? The opening balance at the first year, which is 2022, is this guy here. That's 605. The cash payment, of course, this guy, the closing balance is definitely going to be the sum. The closing balance is going to be opening balance minus principal reduction, right? It's not just opening balance minus cash payment. It's the opening balance minus the portion of the cash that has been used to repay. That's this. Of course, opening balance will just be the previous opening balance. Okay. Now, cash payments, we are making this amount. We're paying this amount every day, every year rather. This is the fixed amount. I'm going to press F4 and do this. So let's quickly format this place. Okay. That's the cash payment. Now, what's the interest accrued? The interest accrued is 9% of the opening balance. So every period, you're taking the interest of the opening balance. So what's this? I'm going to say equals this times 9% F4. Now, this is showing it because I've not put in the principal reduction here. So let's put in the principal reduction. What's the principal reduction? Principal reduction is the amount of this that was used to pay principal. So I'm going to say this minus this. And I can see that at the end of 10 years, my entire loan is paid off. Again, I have the opening balance. The opening balance is the same as the closing balance. This is the cash payment that was gotten based on the PMT function, based on the fact that we know that we're going to repay this loan in 10 years, and we have an interest of 9%, right? This is the interest accrued. The interest accrued is the percentage times the opening balance. That's how you calculate the interest that are going to accrue, are going to pay for that period. right? Then the principal reduction is saying, I'm paying 94 million. Out of 94 million, interest is 50 million. That means I'm only reducing my actual principal by 43 million, which gives me this closing balance. So by the end of 10 years, which is 2020, only God knows what, the closing balance is going to be zero because you will have paid, by the time you sum up the total principal reduction, that's your 605, which you are owing. And you are saying in this case, the interest you're paying is actually about half of the entire loan, but that's the loan. Okay, so with this in mind, I can fill in my income statement and I can fill in my principal reduction and my financial liabilities. First of all, let's put my financial liabilities. My principal reduction is going to be equal to this value. Let me put a minus here. So that means at the end of 2026, the closing balance is going to be this. Okay, that's that. Now, the interest accrued, rather, ouch, is going to be what? I'm going to come to my income statement here and just link it directly. That's my interest. Come to my financial liabilities, click on interest, let me make it negative. And there you go. Now I have completed the income statement. So I don't need this guy anymore. My income statement is complete. I have my revenue, my other income, my cost of goods sold, and so on and so forth. Everything is completed. And I can see that my net income is still increasing year on year, which shows that, okay, things are fine. My balance sheet, I need to fill in my financial liabilities. Come here, and I go to my financial liabilities. I pick my closing balance, and these are the closing balances. Notice that the numbers here are going down, not by the factor of this 94, but by the factor of the principal reduction. Because even though you're paying 94 every month, every year rather, it's not the entire 94 that is going to reduce your principal. So that gives you this amount. So that is done as well. What is left is equity, and then we do our cash flow statement. Okay, let's quickly create equity. So I think equity is just going to be something similar. Let me just click here, drag, and put this here, and call this SOCIE, Statement of Changes in Equity. So I can delete all of this. I can, let me just remove this. So we call it Statement of Changes in Equity. Okay, so you have your opening balance, yes. Then you add your addition, let me just say additions to equity. If there's anything like that, you put it there. Let me add some more lines. After additions to equity, we then consider our net income. Okay, how much net income came in? Then after we look at our net income, we will remove any dividends paid. Okay, so we'll look at opening balance, additions to equity, we look at net income, any dividends paid. By the time we do that, we'll get the closing balance of equity. In this case, we're not considering all these other OCI, other comprehensive income. We're not looking at that here. We're just looking at the simple case, right? So just to forecast these values here. Again, in terms of changing the equity, I have my equity numbers, the actuals on the balance sheet. Where is it? This is my balance sheet. Okay, this is my equity. So I can see that my equity numbers are going up. We don't know what these values were, but we can just assume that we don't need them, at least for our forecast. Additions to equity, we're assuming we're not paying any additional equity. Sorry. We're not paying any additional equity, so that's zero. Net income, I need to go and pick in my net income from the, what's it called? Income statement here. So my net income is increasing my equity values via retained earnings, right? Then dividend paid. They gave us the assumption here that we'll be paying 40% as dividend. Okay. So I just need to come here under SOCI and say equals this value times 40%, F4. And that gives you your closing equity. So out of the money that we're making, we're giving out this amount to the shareholders. So this is our closing equity year on year. So I just need to come to my balance sheet and equals SOCI. And there we go. So now all we need to do is to fill in these our cash numbers. I mean, as you can see, as you can see, normally, if like I know that this thing looks so easy and direct. It's not as because this is a very simple case study. It's just to look at the basics. We didn't consider so many things, or at least we consider the things that I felt are very key, right? So now the last thing to do is just to create our cash flow statement. Okay, so cash flow. We're just going to do a forecast cash flow. That's all we're going to do. Okay, I should have done that. Let me just link it to this place. Okay, I'm going to call this cash flow. I'm going to delete all of these. I'm going to delete all of these. Okay, good. So you know how we calculate our cash flow. The indirect or the direct method. We're going to use the indirect method and we're going to just see how we can. Once we're done with our cash flow and we have our ending cash, we just go and put it inside the balance sheet. And if we have worked correctly, if you have considered everything we're supposed to consider, it should balance. Okay, fingers crossed. Let's begin. So you know our indirect cash flow. We have three parts of the cash flow. We have changes, and we have operating activities. Then after that, we have investing activities. Then we have financing activities. Okay, so now what I need to do. Hello?
Can we change the title of the sheet?
Okay, so now what I need to do is to estimate each of these guys one by one, and we are done. So let's start with operating activities. Of course, we're going to start with our net income. So the net income values you already have. So I can just go to my P&L, pick this. Those are our net income values. Next, let's look at the net income. Is there any non-cash item? Yes, there is depreciation. Depreciation is non-cash. So I'm going to say add depreciation because it's non-cash. So I'm going to say equals minus depreciation value. I'm going to pick this. So I'm going to add this back. So after that, let's go back to the P&L. Is there any other non-cash? There's no non-cash. Every other thing we're assuming is cash. So we're good. So after I've done that, let's now look at the changes in working capital. So I'm going to say changes in working capital. Okay. The first working capital item, we have all the working capital item basically will be all the non-cash liabilities and assets. So I'm going to select 1, 2, 3. I'm going to select 1, 2. So, and of course, 3 here. So we have 1, 2, 3. You know, in fact, I mean, so yeah, let's just take this copy and come here and paste. So I have all these items I'm going to look at one by one. So for each of them, to calculate the changes in working capital, we know for assets, it's going to be previous minus current. For liabilities, it's going to be current minus previous because assets, you assume money is going out, liabilities, assume money is coming in. So let's go. For inventory and trade receivables, I'm going to say equals 2022, Abby. Wait, let me sure I pick 2022 here. Okay, yeah, that's fine. And let's also be sure I pick 2022 here. Okay, that's good. So let's start with inventory and trade receivables. Okay, we can even do the three of them at the same time. Equals, I'm going to take the 2021 value, subtract the 2022 value. Okay, and that gives me the changes in working capital for these lines. And I'm going to do the same thing for the provisions But this time I'm going to take this minus this, right? Because you're assuming that if it is increasing, it means money is coming in. And you can see that it is increasing year on year, meaning that money is coming in. The other guys were increasing year on year, which meant that money was going out, and that's why they are negative. So the same thing for other liabilities. I'm going to take this minus this. That gives me that. So this one just increased basically year on year. So now I can now calculate my total cash. I mean, let me just say cash from operating activities. Cash from operating activities. Okay, it's going to be the sum of all these. Control B to make it bold, and I'm going to just give it a top and bottom border. So that's cash from operating activities, net income minus depreciation, then all the changes in working capital. So I've used 1, 2, 3, 4, 5, 6. Okay, so good. Next, investing activities. I think in this case, the only one we have is capex, so you can just go and pick capex directly. And that is from the financial liabilities. Sorry, fixed asset schedule. These are our capex values. That's that. Okay. Next, let me just make this bold and give it one underline. Last is financing activities. So for financing activities, we're going to look at any changes in the debt, which is changes here, and also changes in equity. Oh, sorry, there's something I've done wrong. So I'm supposed to, this is, capex is supposed to be negative. So if I put a minus sign here, that gives you this, okay? So yeah, we're getting there. So now, for financial liabilities, I just need to check what has changed between here and here. And also for equity, I need to check what has changed between here and here. Because you can see financial liabilities, what is changing is just the principal reduction. So we just need to take that value and pick it from there. So I'm going to have changes in financial, or let me just call this loan repayments. Changes in financial liabilities, and then changes in equity. Okay, so I'm going to say for financial liabilities, it's going to be this value minus this value. That gives you this. And changes in equity, it's going to be this value minus this value. That gives you this. So if I take this, okay, so so I can say my total changes in financial activities. No. Sorry, there's an error. Change in financial liabilities is that's what's it called? Cash repayments. Cash payments. Because we're paying cash. Yeah, so cash payments, let's just call it loan payments. Okay, I can say total finance, let's say cash from financing activities. So I can take this, sum it up, that gives you this. So now, if we have worked correctly, this thing should balance. If it doesn't balance, we now check why. Maybe there's something that we've done wrong or something. Okay, So I'm going to have my opening cash here. Opening cash is the closing cash of 2022, which is this. Okay, I'm going to have my changes in cash. Okay, and I'm going to have my closing cash. So that's going to be this plus this. Okay, so my changes in cash is going to be, let's bring this down. Come down here, select this, okay? It's going to be operating cash plus capex plus this. And that gives you this. Okay? So this is my opening cash. Sorry. And then I can now take equals this and click here. Then I can drag this to the right. So Ctrl Z. 4. Okay. So by the time I come here and I pick these values here, see that there's something wrong. So that means we have not worked correctly. Now let's.
Okay, hello. I think the item that was picked for the financing section, the cash that was picked was just the principal repayment. The loan was not included.
So I didn't get that.
I mean, sorry, the interest was not included.
Okay, I'm supposed. Yes, thank you.
Yes.
So once I'm supposed to pick okay. What is this thing on? Yeah, I'm supposed to pick these guys here. Okay. So there's still something that we're not still looking at. Well, in this case, the easiest thing to do is to do a change and see what is what's the variance here? 1.4. 1.4 equity. Okay, let's quickly do a month on month. This is what I do most times when I'm working, even in the office, and then we balance. We'll just do a difference here to this minus this. And this should be able to explain all of the variances.
Okay.
Our cash flow should be able to speak to these variances so we can know where there's something wrong. Okay, so let's start with trade receivables. 1, 2, 3. 1, 2, 3. This is negative 34.21. If I select this, this is 4.06. Okay, this is supposed to be assets are supposed to be equals this minus this. Okay. Whereas the liabilities will be this minus this. Okay, that's fine. So if I take 1, 2, 3, and I take this and this, that gives me 40, which is what I have. But this is fine. I can select this and give it a color, and they are good. Let's look at the PPE. Change the PPE is 14. If I take this depreciation and subtract this, that's 14. So this is fine. Financial liabilities, the change is 39. If I take my loan payments, oh, I see. This is positive. This is supposed to be negative. Yeah, that's where it's from. I'm supposed to put a minus here. Okay. So let's go back to the balance sheet. But these are loan payments. Okay. So my loan payment is 39, and this is negative of this. The other one is here. Let's go to the equity. My equity is saying 212. What do I have? I have 212. Gerege. So I see where my error is. I'm not supposed to take the changes in equity because I'm starting from net income. What I was supposed to put here was just the dividends paid. because I started from net income. I didn't think it was a direct listen. Equity already
So
encompasses all
it's
these net
looking like there is a new subscription, like
Yeah, exactly.
increase in share capital.
Yeah, exactly. Whereas there's none, exactly. So I've already all I need to factor in this SOCI, my net income has already been taken. So putting net income here and putting net income here is an error. I should have just put in the dividends paid, and dividends paid is negative. So I take my SOCI, come to dividends paid here. Okay, so this is 212. What else is changing? From this to this increased by 212. So if I take, well, I've assumed that this is fine, this is fine, this is fine. If I take the sum of these two, that's 397, right? Okay. Let me see, is only changing by this value. Okay, that's fine. The balance sheet is speaking from here. Yeah, that's fine. Let's see. Net income here, subtracting depreciation. You have this. This is increasing by a whole lot. That's the problem. So what's the major thing that's causing it to increase? This. This is reducing, this is reducing, this is increasing. The opening cash. Oh, look at me. I linked it wrongly, Nisha. I was supposed to link it to this guy here.
Opening cash is 220.
Yes, it's 220.
Oh yeah.
So this is more like it. What else is missing? This is 54. That number looks familiar. That's the thing about itself. One wrong value like this, and everything will fall apart. So if I take my opening cash of 220 and I add these values, I've said this is fine. All these are fine. This one for okay. This 39 financial liabilities. 39 has to do with this guy. Oh, see, you can't put 94 here because I've already factored in the interest payment here.
Up, yeah.
Interest payment
So it should just be the capital repayment.
Yes.
Capital repayment. Okay.
Exactly. Which is this guy, exactly. So now all I need to do is to take this guy here, go to financial liabilities. Where is it?
Up.
Yeah, up there.
E5.
Go.
Yeah.
Now, so I mean, the matter is that thing is more of an art, and it takes a lot of kind of dedication to be able to. But once and mistake, I mean, one of the things that mistake is not. There's no issue with mistakes. You can always trace it back. Like one of the things I just once I can trace each of these variances in my cash flow. Any variance that is not there, just try to explain. Once I can explain it, I'm good. So, but that's the basic understanding of how it works. I hope this class was fruitful and you're able to learn things.
Yeah, so very.
Thank you very much. So will the video be made available for us as well as the start file and finish file so that we'll be able to work through it. Thank you very much for having me. Thank you for the time. We have just two.
Thank you so much.
Have a wonderful weekend ahead.
Thank you so much. God bless you, sir.